Greetings, members one and all of the Salivation Nation. This is becoming a habit. The Dow Jones Industrial Average is down another 10%. The bear market continues. In yesterday's video, I misspoke and said a bull market when I meant bear. We're definitely in a bear market, and the stock market is reacting accordingly, and everything else is reacting accordingly. Things are getting shut down and canceled every which way but loose. Crazy media frenzy that is much worse than the coronavirus itself. It is absolutely insane what is going on with the media today, and with all these cancellations and everything because Tom Hanks got the coronavirus. But nonetheless, it is affecting everything. The economy is essentially being ruined in the short term, and let's explore some of the reasons why. We have gold dropping over 3% as traders sell what they can amid intensifying coronavirus fears. That's right, gold futures fell sharply Thursday, settling at nearly a 2-week low under $1,600 an ounce, as a sell-off in the stock market sent traders scrambling to sell positions in the precious metal in a bid for cash. And look here, a bulletin. Disneyland in California closing through the end of the month amid the outbreak. Traders are selling what they can in a panicked marketplace. That includes silver and gold, according to Jim Wyckoff, senior analyst at Kitco.com, in a daily note. Market liquidity in a panicky global marketplace is drying up as traders and investors back away from trading markets. When in doubt, get out is the mantra today. It looks like that's happening for gold and silver as well. Gold for April delivery was down 4.293% on COMEX, fell by $52 at 3.2% to settle at $1,590.30 an ounce, extending its decline for a third straight session. That was the lowest, most active contract settlement since February 28th, according to FactSet data. We'll explore the current prices here momentarily. Silver took a much worse beating, in my view. It was down negative 6.295%, lost 77.1 cents, or 4.6 to $16 an ounce, for the lowest, most active contract finish since July of last year. Prices for gold, however, finished off the session's intraday low at $1,560.40, with prices staging a turn around. The Federal Reserve stepped in with an immediate liquidity injection, said Jeff Wright, Executive Vice President of Gold Mining, Inc. The New York Fed Thursday afternoon announced measures to address highly unusual disruptions in treasury markets. So there, the Federal Reserve is going to inject $1.5 trillion to ease liquidity conditions in markets. Is that QE4? Some people believe we've already been in QE4 with the repurchase agreements that have been occurring essentially behind the scenes in these day loans between banks out there. Still, investors were liquidating any and all positions in every asset class on Thursday, said Wright. The market is waiting for the Federal Open Market Committee meeting next week and wondering what actions Fed Chairman Jerome Powell will take to stem the tide. Wright believes gold will tread around $1,600 an ounce, while safe haven buying is not happening. Safe haven stability is there compared to other asset classes, and that is true. I will say that. We'll look at that here closely. Benchmark U.S. stock index dropped Thursday. The Dow Jones Industrial Average was down about 10%, down 1,700 points. 10-year Treasury note yield was down 9.7 basis points. The notion that gold has to serve as a financial safe haven during the crisis is at best myopic, at worst misguided altogether, said Ryan Gianotto, Director of Research at Granite Shares, which offers Janet Shares Gold Trust. Over the 3 weeks since the stock market sell-off began, gold rallied 1.25%, behavior consistent with its 1.75% monthly compound gains over the last 18 months, he told MarketWatch early Thursday. Over the same time period, aggregate bonds have appreciated by only 0.004%, which have come under massive selling pressures this week. In other words, gold has provided 31 times the inoculating effect of aggregate bonds during the coronavirus sell-off, he explained. So acute has been this rotation out of a fixed income that the asset class has forfeited more than the year's worth of coupons. The market move follows an address to the nation by President Donald Trump. We announced that yesterday that it was coming. The foreign nationals entering the U.S. from Europe for 30 days in an effort to fight the COVID-19 outbreak. Other metals settled broadly. Platinum down. We'll look at those too. So this leads us to this question. This is from CoinDesk, which is a cryptocurrency publication here. We read from MarketWatch earlier, but it says, turns out cold hard cash with a helping of government bonds, not Bitcoin or even gold, is where people turn in the face of the pandemic and market turmoil. And that does seem to be the case. Makes me kind of glad that another overtaxed taxpayer started the gold challenge, gold coin challenge, and I dubbed the gold envelope challenge. You put cash away for times when gold gets, because apparently that's what they're doing. People are getting out of everything, including gold. It's apocalyptic out there. Traditional safe havens like gold are down, said Rupert Douglas, head of business development, institutional sales at Coin. Traders liquidating holdings on crypto's bellwether derivatives exchange fueled some of these moves. Gold also got hit as traders sold the yellow metal for the safety of much-needed cash as losses mounted in equities. And here the feds are going to pump more cash into the system. It's crazy. And let's see here. So gold is down, but well off its lows as Federal Reserve fires its bazooka. So here's the Jim Wyckoff article that was referenced in the MarketWatch piece. Gold prices fell lower at midday as U.S. futures traded Thursday, but well off daily lows, and saw prices hit a 5-week low earlier as the Federal Reserve just unleashed a massive amount of short-term funding into the financial markets in an effort to increase liquidity that had become tight in recent days. Veteran market watchers are calling the Fed move a bazooka shot, referencing a former U.S. Treasury Secretary who used the term during the U.S. government's effort to contain the 2008 financial crisis. Silver prices are sharply down and hit an 8-month low earlier today. Crazy. However, silver prices are also well up from their lows, but not much up from their lows. Their lows were high 14s, low 15s. April gold futures were last down $43.20 an ounce at $15.98. May COMEX silver prices were last down about 71 cents at $16.07 an ounce. The U.S. Central Bank is meeting Thursday to announce monetary policy stimulus measures to battle the negative economic effects of the COVID-19 outbreak. However, the moves were deemed as lukewarm by the marketplace. So it is interesting. It goes on to say that the COVID-19 pandemic is responsible for all of the above and now has a global marketplace in panic. But it's not really the pandemic itself. It is the media's reaction to it, and social media, and what places such as, the National Basketball Association, the NCAA, all these events are being canceled. Universities are being canceled. A lot of different things, classes and everything like that are now resuming online. And that is going to really hurt the economy, which I think is the bigger news. And it's going to take a lot longer to recover from this, I believe, even with the liquidity in place, especially what's happening lately. It's the panic that is the worst. There's China essentially is recovering right now, and there's more people recovering than are getting it there. And it's going to happen. As President Trump said last night, this is a temporary moment in time. This too shall pass. We shouldn't panic. You can take proactive measures but common sense. There's no use to take the baby out with the bathwater, so to speak, because I think this is going to end up hurting in the long run. The more we handle these kind of things, it's just it's really unfortunate to kind of see this stuff happening. And where this goes, the gold to silver ratio here, a measure of how many ounces can be brought down with 1 ounce of gold. It's the highest level we've seen since 1991. and it's talking about this another yield curve inversion. Could we be at the apex of another recession because of what's going on here? I know some people would hope for it politically, but ideally for everybody, we don't want that. And so the best thing to do is to not panic. But with silver especially reacting, it's getting closer and closer to its lows here. And with everybody getting out of everything, I think its movement downward is being treated as a commodity, especially. But looking at the precious metal prices here, and we see that silver got slammed hard, over 5%, over 5.5% drop, almost $1 drop in a price there to a level that I didn't think we'd see. I thought we were maybe see the low 16s, mid to low 16s at the very worst. But here it is, $15.89 as of the recording of this video. The market here is about to close. And gold is down $58, but is well below $1,600 right now. So it's down 3.57%. But look at the platinum group metals. Even they are affected here. Platinum is down 11%, $97. It's hitting pretty bad. That's a commodity move there, I think. And palladium is finally getting hit with this stuff. It is now well below $1,900, or somewhat below, but well below $2,000 now. $1,896. It's down almost 21%. Palladium got hit smack down hard. But when you think about the grand scheme of things, both gold and palladium are up, still considerably from what we would consider normal levels. But silver's taking a beating, platinum's taking a beating, rhodium's taking a little bit of a hit here, $900 drop. So it's obviously now just above $12,000, but it went up really fast. I'm surprised rhodium didn't get hit harder on this. But there it is. It's crazy today. Another wild day. The Dow Jones Industrial Average. If we have many more days like this in the stock market, who knows? This is a black swan event, and so everything is acting very strange. But for now, but it too shall pass. But if we do hit another recession and we do get into that area, sentiment is going to be down. The markets, people are going to shy away from it. Where will they go then? They will go to the safe haven of precious metals. And I believe that we will see gold be part of that, especially if the prices dip down as a buying opportunity. But gold's took the least of the hit today. And I believe that because of that, even gold's only down even though it's down over almost $60, it's down really only over 3.5%, meaning that people aren't so quick to sell their gold, whereas they were very quick to sell the silver. But don't lose hope on silver, because as if we do hit another recession, and I hope we don't, my feeling is unless we have more days like we saw today in the last couple of days, we probably won't, unless sentiment turns in a different direction. But then people will return to the safe haven of the precious metals and buy gold until it runs gold up to a price that doesn't seem viable for most people. Then they will turn to silver. And you will start to see silver close that ratio between gold, and see the gold to silver narrow. I believe that's what will happen in due course. But this is an unusual event. We live in essentially uncharted territory right now with these precious metal prices. We'll see how it plays out. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.